Hello guys, I'm Paris, the Options Guy, and welcome back to the No BS Trading Podcast. And this week was a very crazy week, starting from the election results where the actual results were not even close to the exit polls. And after that, Nifty falling down 2000 points in a single day and then recovering that fall by the end of the week. And many more things. We'll also talk about the unemployment data that has just come out on Friday. So yes, without any further delay, let's just start with the episode right now. Now, a lot of things have happened in this crazy week that went by, starting off from Monday, where we opened with a very big gap up in our Indian markets because of the exit polls. Because exit polls were pretty good, and that's why we opened with a very big gap up. And then throughout the day, we just consolidated, and in the end, we closed higher, right? But yes, on Monday, in the evening we had the US manufacturing PMI, and as I said that if it comes below 50, that means the manufacturing activity in US has started to slow down. Now it has come at 48.7. That means one more sign that the US economy is slowing down. Now why am I stressing so much on this point is that if a recession is to come by, which everybody is denying that the chances of a recession are not really very high, but I feel like the US economy is slowing down, and we already might be in a recession, which is sort of a bit opposite of what the economic indicators are telling us. So US manufacturing PMI coming at 48.7. Last month it was 49.2. So even lower than last month. That means activity is slowing down at a faster pace. Although we need to have much bigger dip than this, not just a half a point dip. We need a bit more dip, maybe 2-3 points down more. Then we can see some sort of real effect on the economy. But yes, on Monday, our markets opened with a gap up and just closed higher. But on Tuesday, our Nifty fell 5.9%. It was the biggest single day fall after 2020 fall, right? That fall that came in COVID. After that, it was the biggest fall. Nifty falling down 2000 points, right? This was due to the election results where NDA got 200 less than 300 seats, and India Alliance surprisingly getting more than 200 seats. This was the factor because of which the market fell down, that India Alliance has gotten more than 200 seats. Now India Alliance has gotten, I think, 232 seats if I'm not wrong, and NDA has gotten 293 seats in the election result. So the more concerning thing is not that NDA has gotten less than 300 seats, but that India Alliance has gotten more than 200 seats. Because if India Alliance gets more seats in the parliament, this will make it harder for the NDA to form policies which might be more favorable towards the market and the growth of the economy. Right now, India Alliance focuses more on public welfare schemes or public welfare policies, which are subsidies and all those things, schemes for the people. And that's why these policies are not really, you can say, focused on the growth of the economy. I mean, sure, there will be growth of the economy when you are doing things for the public welfare, but still, doing some sort of a capex plan or doing some sort of a PLI scheme where you are helping companies set up factories and all those stuff, that will help the growth of the economy much more, right? And that is what the NDA focuses on. But since India Alliance is getting more seats, that means they will make it harder for NDA to form these policies and enact these policies in the economy or in India, right? And that was the reason why we fell. But I'm going to tell you one thing why it is not really a big concern. Because if you see, a lot of parties have come in the support of NDA or in support of BJP, right? I think two ministers gave a letter of support to PM Modi. I don't really know because I don't delve a lot into the exact details of politics and all those stuff. But yes, those guys also gave a letter of support to BJP. So in all, I don't think it will be a very big thing or a very big concerning thing that India Alliance has gotten more seats. And because of that itself, if you see in the next 3 days, market completely gave a V-shaped recovery and recovered almost all of the fall, and Nifty has closed near the all-time high. Just I think Nifty was like 18 points away from making a new all-time high today. That is on Friday. Now I'm recording this on Friday evening. So yes, Nifty was just 18 points away from making an all-time high. And one thing, guys, I gave on Instagram itself, I gave you guys a signal on the day of the fall itself, near 21,800, that you guys can go ahead and start adding stocks at this level, because this is a good level and this is a short-term negativity. Now, I wasn't expecting a V-shaped recovery in just 3 days, but still, if you would have bought stocks over there, you would have been seeing a very, very good profit as of now. So do follow me on Instagram. I have the link in the description. Anywhere you are watching, there will be a link in the description for the Instagram account, or you can just search _options guy and you will find my Instagram account, because I can give a lot of signals over there on my stories, which I cannot really do on maybe YouTube or even on any podcasting platform, right? So definitely do follow me on Instagram. But yes, because of this, the market also recovered, as I said, that it won't really be a big problem, right? Now, after that, nothing much happened after that. Market just recovered, as I said. But yesterday, on Friday, there was the RBI meeting. And even there, nothing much happened. RBI kept the rates unchanged. And they didn't announce anything major which would affect the whole market. They did announce a few measures for NBFCs and all those stuff. But it wasn't really some sort of a groundbreaking thing which would affect the whole market together, right? But after that, we also had the US unemployment data, which has just came out a few hours ago, where unemployment is now at 4%. Estimates were at 3.9%. As I had said, that if unemployment starts to rise, we'll get one more economic indicator that the US economy is slowing down. Now, keep in mind that if we get even more confirmations that the US economy is slowing down, you will need to book your profits out on your investments. Why am I saying so? Is because it looks like, historically speaking, it looks like the markets have been a little bit overstretched, right? And the US economy, like the people are saying that the US economy is very strong right now. All the economic indicators are saying this, saying that. I feel like at the core of it, there are the consumers, there are the normal people who are going to uh, be the growth factor for the economy, where they spend and all that stuff. And the consumers, the normal people, are not doing so great. It is just the very small percentage at the highest end of the economy, the people who earn the most, the people who have the most amount of wealth, those guys are only doing great. And so at the core of it, I don't think the US economy is really very strong right now. And yes, you can say that the Indian economy might not be so connected to the US economy, and the Indian economy is doing well. And yes, I will agree that Indian economy is doing much better. But you have to understand that a lot of money that is pushed into the Indian stock market, that takes our stock market up, is the US money that is coming from FIIs and FBIs, foreign institutional investors and foreign portfolio investors. These guys are the ones who are going to pump the market up, right? And if in their own economy, if they feel like the US economy is doing so great, they will also start booking profits in Indian economy. Please do not think that our markets are something different. Our markets will never fall if the US economy doesn't do great or this or that. Our markets will also be very affected. So that's why we need to keep a very close eye on how the US economy is doing. So as of now, I'm not saying that today is the doomsday and all that stuff and you should book all of your profits, sit on cash. As I said that, I had also said in my 4th June video that Nifty will go till 24,000 if we close about 22,600. So as of now, there is nothing like a cause of concern at the very moment, but these are the signs, these are the warning signs that we are getting in the data, which a lot of people might think, okay, what is just 0.1% uptick in unemployment data? But you have to understand that unemployment data has been flattening out since the last 2 years. It is not going down. It is rather starting to go up very slowly, right? And if it starts to take pace, if it starts to take more pace, right now, unemployment data this month has gone up by just 0.1%. In the next 2 months, maybe in the next 2 months of data, it goes up by 0.3% in just 1 month, right? So that will be a cause of concern. So you need to keep a very close eye on all of these things, because these are the things that will determine where the market will top out, or where should you book your investments out, because holding your investments all the way down is not really great. You need to book your profits at higher levels. Maybe you should not book all of your investments out, but at least book a little bit of profit at higher levels. Now, for me, where will I book? I think before the end of this year, I will definitely book a lot of my profits out of the market and sit on cash, because I feel like the way where we are heading, right, by the inflation data, by the unemployment number, and all these things that I've been saying since the last few weeks and in my podcast, I feel like by the end of this year, the US economy will not really be in such a great position as it is now, or the euphoria that is going on in the US market, in our markets, won't really be as strong. So definitely before the end of this year, wherever I feel like the top has been made there. Now, whenever a top is made, usually there is a blow off top that is made in bull markets, where the market will go very violently. Like, you will see a very, very, very sharp up move and then a very sharp down move. If that happens, it is a sign of a blow off top in the market. So yes, definitely I feel like if that is something that is made in our markets or in the US markets also, we will need to be very vigilant. But as of now, these are just warning signs that you need to keep in mind. So these are the things that happened this week. Now let's talk about what is going to happen in the next week. Now, how the election is going to play out, what are the major events that are going to happen in our markets and in the US markets. So yes, let's just move on. Now, after such a crazy week that went by in our markets, the next week is a sort of a chill week, where there aren't any major events that are going to happen in our markets. But in US, we have the US CPI data on Wednesday, and the CPI is expected to come out at 3.4%, and core CPI is expected to come out at 3.5%. Now, I wanted to look at core CPI more as compared to US CPI, or give more importance to core CPI, because core CPI has already started to rise. It is starting to creep up. The US CPI hasn't started to creep up as of now. It is still stagnant, but core CPI has already started to creep up. So if the core CPI still continues to move higher, come higher than expectations, that is, come higher than 3.5%, it is going to give you a much better hint of where the actual CPI numbers are going to head. And if the CPI goes higher, chances are Fed might even hike rates, or just not cut rates this year like people are expecting. Now, as of now, the market is expecting 2 rate hikes this year. It was 1 rate hike just last episode, but yes, as of now, the market is expecting 2 rate hikes this year. But as I said, I don't expect any, not 2 rate hikes, but 2 rate cuts this year. I'm really sorry for that. But yes, market is expecting 2 rate cuts this year. But I feel like as of now, it is very hard to say that we'll even get 2 rate cuts, looking at the progress that the inflation is making downwards. Now, a lot of other central banks like the ECB, the European Central Bank, it has cut rates. Now, a lot of people are, that's why, rejoicing that the US Fed will also cut rates, and that's why, if you see, the US market is expecting 2 rate cuts, but last week the US market was just expecting 1 rate cut, and that is because, as I said, that ECB has cut rates for the first time since 2019. So that's why the people in the US market are also expecting that the Fed will soon follow suit and start to cut rates. But there is if we just go by the things that Jerome Powell himself has said, that until and unless they don't get a proper control over inflation or a proper confidence that the inflation has come down and it will stay down, they will not cut rates. And we cannot really see that the inflation is coming down. It is just stuck at the level that it is at right now. So yes, very important CPI data. And a few hours after that itself, we have the Fed interest rate decision, where the Fed will say if they have made any changes to the interest rates, the US interest rate, right? Now, expectations are that they will not change any rates, they will not cut rates or hike rates, they will just keep it as it is, right? And it will not be, and I also think that there won't be any changes, but more important will be the statements that are made by Jerome Powell after the interest rates are after the interest rate decision is out. So definitely on Wednesday, it is better if we do not take any positions, because there might be a little bit of volatility in the market. We might open with a substantial gap up or a gap down. So yes, that is the interest rate decision that is going to come out on Wednesday. And then on Thursday we have the US PPI, that is Producers Price Index, which is sort of, you can say that the wholesale inflation, you can say, sort of, not really wholesale inflation, but still close to that. But expectations are that the PPI index will come out at 2.2%, that is 2.2% inflation. Now PPI has also continued to rise over here in the last couple of months, you can say. So PPI is also showing signs of rising inflation. This is not really a great news for the Fed or the market, and it is showing us some early signs that inflation might again start to creep up in or the CPI inflation, and both the PPI inflation also might start to creep up, because if producers have to pay higher price to make their goods, they will also price their products higher, and that's why the CPI will also rise higher subsequently, right? So PPI index also very important. All of these data that is going to come from US is going to be very important, although not much data that is going to come from our markets this week. So yes, that is it for the data that is going to come this week. Now let's move on to the IPOs that are going to come in our markets next week. Now, before starting off with the IPOs that are coming in the next week, I would like to apologize for one thing, and that is that I missed an IPO in the last week's episode. There was the Chronox Lab Sciences IPO that came in this week, the week that went by, and I actually missed that and said that there were no IPOs that were coming in the week that went by, right? But I'm really sorry for that. That will not happen in the coming episodes or ever again, right? But still, if that happens, do follow me on Instagram, because I will definitely post an update over there and give you an analysis on Instagram itself. And for more such things, right, if there is a change in the gray market premium of any IPOs and all that stuff, so you guys will definitely be updated with the latest news and things that are happening, so that you can take the right decisions. But yes, without taking any further of your time, let's just start with the IPO. And the IPO that is going to come this week is the La Travenues Technology Limited IPO. Now, this is not a very well-known company if you look at that name, but if you look at the brand that they own, the Ixigo brand, right? Now you must have used the Ixigo app, right, to maybe book train tickets, maybe book flight tickets, or check your train or whatever. So they own this Ixigo brand, and so and this is an online travel agency. So basically they book online tickets for you. It is very self-explanatory, right? So now they are launching an IPO of 740 crores, right? The IPO will start from 10 June and close on 12th June. That is from Monday till Wednesday, right? But one thing that you need to keep in mind is that out of the 740 crores, 620 crores will go to the promoters who are selling their stake, and only 120 crores will go into the company. So this is a bit of a bummer, because this is very less, right? I mean, more than you can say 70%, two-thirds of the IPO proceeds are going to the promoters. So very less money coming into the company actually from this IPO. But still, IPO price band is from 88 to 93 rupees. So you will apply at 93 rupees only. But yes, if that means you will need to, the minimum investment is 14,973 rupees. That is for one lot. So IPO, as I said, starts on June 10th, closes on June 12th. So this is all right, but what can we do for the IPO? Should we apply in it or not? So from the GMP perspective, the gray market premium perspective, the gray market premium is going on at 30%. Now the rule that the very you can say the quick rule that I followed to see is it a good IPO to apply just for the listing gains perspective is that if the listing gains is higher than 50%, it is a good bet to apply for listing gains. Now for the listing, from the listing gains perspective, the listing gain is just estimated at 30% as of now. The gray market premium is going on at 30%. So yes, from the listing gains perspective, not such an attractive IPO, but I want you to keep an eye on the listing gains of this guy on Monday and on Tuesday. And so for that purpose, you can check it online itself. If it rises 50% or above that, then you guys can apply for listing gains, right? And also you can follow me on Instagram because I will give you guys an update over there also about the listing gains if there is any sort of a major change in the listing gains. So yes, from the listing gains perspective, as of now, not really a very lucrative bet. So I would say just stay away. However, if you are very risky, if you can really take a lot of risk, then you can think about applying even for the listing gains perspective. But I don't think you will get a very good listing gain. Now after that, if you see from the fundamental perspective, from the investment perspective, from the investment in this IPO, should you apply in this IPO? So from there, for that we will look at the revenue first of all of the company. So in FY21 the revenue was at 38 crores, and from there in FY22 the revenue went at 384 crores, FY23 517 crores, and as of December 31st, so the 9 months of the FY24, the revenue is at 497 crores. So the revenue growth is very good. However, I feel like in FY24 the revenue has slowed down a little bit. Now we'll need to see how the last quarter results come out, but as of the 9 months revenue, it looks like the revenue has slowed down a little bit, not a lot, but still not a major problem in terms of revenue. So the growth is very good. Now one thing that you need to keep in mind is that this is an online travel agency. So the online space in booking, the online booking space you can say, or the online travel space or the online travel industry, you can say, is growing at a very good rate. So if you see, the OTAs foresee a robust 16% growth every year, and 16% is a very good growth as an if you're talking about the growth of an industry. So the industrial growth is very good. So the industry is growing at a very good pace. So it is expected that these guys will also grow at a pretty good pace in the coming years also. And talking about profit also, if you see in FY21 they had 7.5 crores of profit. In FY22 they had a 21 crores of loss. But from there in FY23 they got back into a profit of 23 crores. And now as of December, the first 9 months of the FY24, they are in 65 crores of profit. So profit also increasing pretty good. And you will see this in companies like this where they are coming from a loss into a profit, is that their profits will rise very exponentially, because these companies, these online companies which are running some sort of an online, you can say, platform, they have a lot of fixed cost. So they need to invest in a lot of things only once, and after that they have the recurring cost of these companies are pretty less. Now I'm not saying they'll be very less, but the recurring costs are pretty less. So once their fixed costs are covered, right, fixed costs are looked out for, after that is when their profits start to rise very exponentially. And that is also what we can see in the case of this company also. So profits rising 210%. If we see from one FY to the second FY. So basically from FY23 to FY24, the first 9 months of FY24. So very, very, very good profit increment. And so from the fundamental perspective, this company is looking very good, right? So one thing that might be a problem is is that it has contracts with IRCTC about the you can say that the e-ticket booking and all that stuff, right? Or maybe you can say checking, or you can say that when someone checks the status of trains and all that stuff, you need to get a license, right? Because a lot of people can also book see at IRCTC's website also, right? So if you want, so basically they have a license because of which you can also see the train status, all that stuff on their website also, or on their platform also. So these licenses, if they expire, it will be a big problem for the company. But even then, they are pretty far into the future. The e-ticket booking license that they have is valid till January 2025. So as of now, not really a problem. And I think even if once these licenses expire, they will also be renewed pretty easily. There is not really a problem until unless the company does something which is very wrong, which again you can't really predict that thing. You can't really predict that, okay, company is doing something wrong inside. Inside the company there is something wrong happening and all that stuff. So yes, not a major deal, not a major problem for the company in that space. So definitely a good IPO in my opinion. Overall a very good IPO. Now only if the GMP could rise, it could be a very good IPO in terms of listing gains also. But from the investment perspective, just a very good company, and growing at a very, very good pace. So you guys can definitely apply in terms of investment, from an investment perspective. But yes, from the GMP perspective, I would say wait till Wednesday. If the GMP rises above 50%, then you can just apply on Wednesday itself, or approve the mandate on Wednesday itself. No need to hurry, right? If you apply on Wednesday and if you apply on Monday, the chances of you getting the IPO are just same. There is no change, right? So yes, do follow me on Instagram, as I said, because if there is a big change in the GMP of the IPO, I will definitely update you guys over there. So yeah, that is it for the IPOs that are going to come this week. Now let's talk about the market technical analysis for the next week in of the Indian market indices. Now talking about the market analysis for this week, if you see, just look at this candle. It looks like that market has done a free trade at lower levels, and then just market just moved at these higher levels, right? It just look at this Nifty's candle. It just looks so absurd, right? It looks like there was some sort of a glitch in the market because of which there is such a big wick on the downside. But if you see in the daily charts, the market actually went down till those lower levels. Same thing with banknifty also. Market actually went down till those lower levels. But if you see banknifty taking very good support from this trend line over here, which is going on since 2020, since the fall of 2020. And so market taking very good support from over there. But the interesting thing is that a lot of sellers have gotten trapped at lower levels. Now whenever the market, keep this thing in mind, is that whenever the market has to move or give a very big move, it will trap someone on the other side of the market and then give a very big move. So over here, if you see, if the market has to give a very big move on the upside, it will trap all the sellers on the downside and then start to move up. Now since over here, if you see, a lot of sellers would have gotten trapped in this up move over here, in this V-shaped recovery, and the FIs have also gotten trapped in some way, because these guys had a very good short position, sure, but they made a lot of short positions in this red candle also, and they've not covered a lot of it. I think they've only covered just 50% of it, and a lot of those short positions are still going on in the market. So as of now one thing is that on 4th June, the video that I uploaded on my channel, go and look at it in the market analysis, is that I said that if we close about 22,600 now on this day, right, where the market was down so much, I had said that if we close about 22,600 on on any day, then we will expect a very good move till 24,000 very fast, right? And if you see markets already going up till 23,300 today itself. Now I have also taken long positions. I'm not going to show you guys what those long positions are because I don't want to um, I don't want you guys to take any sort of a gamble just because I've taken any sort of position. You have to take positions on your own self. You cannot imitate positions, someone else's positions, because if they let's say tomorrow itself in the market, in live market, I decide to cut my position because tomorrow market is falling so much, you will not be able to cut your positions. How will you be able to cut your positions? Because I will tell you at the end of the week that I've cut my positions, right? So that's why I decide not to show my positions. So I also have a few long positions that I made at this day itself, because again I'm not just telling you guys to do this, do that. I do it myself also, because if you can't believe on your, if you can't act on your own things that you say to others, then what's the point of even saying to others? Because you aren't even confident yourself, right? And that's why I also take a lot of, most of the swing trades I also take that I give on my Instagram channel and YouTube channel via shorts, right? So I also take a lot of swing trades. But yes, let's leave that aside. Over here, market being completely bullish. Why is it bullish? Because it has trapped a lot of sellers on the downside, and now it looks like we will move till 24,000 very fast. Now one thing that I want to show you, which is a bit of a good news for our stock market, is gold. If you see gold today falling 3.57%, this means a lot of money has come out of safe haven assets. So gold is a safe haven asset when the market is trying to remove the risk or get a little bit on the sidelines, then a lot of money goes into gold. But gold, if you see, has gone down 3.6% today. As of now, gold has gone down 3.6%. This is a good news for the stock market. If gold continues to be in pressure, a lot of money will flow into the stock market, into stocks, and because of this we'll get an extra strength which will go take us till 24,000. And I still stand by my thing that I said in the 4 June's video, is that now we will go till 24,000 very fast, and this will be a very fast move, right? Any sort of dip that we get in the market, we will go ahead and use it as a long as a way to take, as an opportunity to take long positions till 24,000 in nifty and in bank nifty also. Now bank nifty being a little bit less strong as compared to nifty, because bank nifty hasn't crossed in major levels, so a lot of short positions I think are still remaining in bank nifty, which hasn't been covered so much as compared to nifty. I don't think there are any major short positions that are left in nifty, but in bank nifty definitely a lot of short positions that are still remaining. So 50,000 will be the important level to watch out for bank nifty. Above that is only when we will start to see a strength coming in bank nifty. But yes, major support to be seen in nifty is 23,000 to 22,900. In this area, if market gives you a dip on Monday, on Tuesday, or whatever, you guys can again go ahead and take a bullish trade till 24,000 on the upside. Now this is a very good weekly support that you can mark on your levels also. Even 22,800, right? You can take this 200 point area itself, but I think if the market has to give a bit of a pullback, then 23,000 is more than enough. Market should not really go below that. But yes, 22,800 also very good support. Only below 22,800 is where there will be a lot of problem, and then the market will come in a big range and it will probably consolidate. But the way it is looking, it is way the market is looking, it looks like market should take a pullback and then continue to move up. Maybe market might not even give you a pullback over here and then just continue to move without taking any sort of a pullback. But yes, any sort of pullback that we get at lower levels, we will go ahead and take a bullish trade, and our targets will be 24,000 long term. But yes, smaller targets I'll give you in just a few seconds over here. But yes, in bank nifty, the major level to watch out for will be 49,500 to 49,200. This zone over here, if bank nifty gives you one pullback over here, you guys can again go ahead and take a bullish trade over here till the targets of all time high also, and 52,000 also on the upside very easily. no problem in that. So I hope that is very clear. Now what can we do for tomorrow? What can we do for Monday? In the 15-minute chart, it looks like market, it will give you at least one pullback on the downside. For Nifty, as I said, 23,000, very easy level to watch out for. If Nifty gives you pullback till 23,000, then you guys can go ahead and take a bullish trade from there itself. However, 23,100 is also very good support over here, and intraday support. So Nifty might even think about giving you a pullback till over there itself and then starting to move up. So if Nifty gives you a good pullback till 23,100, and then in 15-minute chart it starts to make positive price action, that is higher high, or start to see any sort of reversal pattern, you guys can go ahead and take a bullish trade over there itself till the target of 23,300 on the upside. But if 23,100 is broken, then we can expect a more correction till 23,000 to 22,900, the zone that I said, right? But yes, we will keep a bullish stance in Nifty as well as Bank Nifty. However, as I said, that Bank Nifty will catch strength only after we go above 50,000 on the upside. So yes, pretty close to 50,000, but still something that you need to keep in mind. For Bank Nifty, as I said, 49,500 to 49,200. Important level to watch out for will be 49,000 to 49,000. Important level to watch out for will be 49,200. So in this area, if you see Bank Nifty coming down and starting to make positive price action, you guys can go ahead and take a bullish trade from there also. If you open the gap up, best thing would be to let the market come down a little bit, and then once the market is near good supports that you see being formed in intraday, then you guys can go ahead and take a bullish trade from there. So yeah guys, again, do subscribe to my YouTube channel also and watch my market analysis videos every day, because there you get an update every day of what is happening in the market, and you get new levels which you can use to take trades every day. So yeah, that was it for the market analysis. Now let's move on to the concept that we are going to learn today. So the concept that we are going to learn today is known as yield curve inversion. Now it might sound very complex, but please understand that it is not very complex. It is very simple. So to understand what is a yield curve inversion, we need to first understand what is the yield of a bond, right? So a bond, let's say a government of any country issues a bond of 100 rupees with a 9% interest on it. That is, they will give 9% interest on it. So that means if you buy the bond from the government at 100 rupees, you'll get a 9% return on that bond, right? So that is your yield, right? However, let's say due to some reason the value of the bond falls to 90 rupees, right, after maybe a few days or after a few months, and if I buy that bond at 90 rupees and I still get that 9 rupees interest on it, now my return on that bond will be 10%, right? Because I've bought the bond at 90 rupees, but I'm still getting that same interest of 9 rupees. So that's why now my returns have gone to 10%. And this return that I've gotten, because of which return that I've gotten on that bond is known as yield. And now my yield is 10% and not 9%, because I've bought the bond at a lower price, right? So I hope the concept of yield is very clear. What is actually the yield of a bond? Now let's understand what is yield curve inversion. Now the general rule of thumb for how the yields of a bond should be is that for government bonds of a country, the higher the maturity period of the bond, that means the longer that you have to hold the bond, the higher the yield that you will get on the bond, because it is associated that if there is more time that you need to hold the bond for, there is more risk that you are taking in holding that bond, right? So that means the higher the time period or higher the maturity period of the bond, the higher the risk. So for example, let's say the US government issues 2-year bonds. So usually the yield on that will be lesser than the yield that you'll get on the 10-year bonds that the US government issues. So now with that concept clear, what yield curve inversion is that sometimes the bond that is short term, the short term bond will give you more yield than the bond which is longer term. So in the case of the 2-year and 10-year bond that I told you about the US government, the 2-year bond will give you more returns as compared to the 10-year bond. Now why this happens is that in the short term bonds value starts to fall, because in the near term, right, let's say it is a 2-year bond, so in the next 2 years investors are expecting something bad to happen to the government, because of which the bond value falls, and that's why you get more yield on the bond. And that is what yield curve inversion is. And so as I said, that if something bad is expected to happen, only then the value of the bond falls, right? So when the value of the bond falls, if investors are if you see a yield curve inversion, then you can expect something bad to happen in the near term to the economy of that country. So in the case of US economy, whenever there is a yield curve inversion, there are high chances of a recession coming in the US economy. So a lot of people take this yield curve inversion as an indicator of economic recession that can come in their economy. So I hope the concept of yield curve inversion is clear in your mind. However, if it is not clear, then you can again search on YouTube or anywhere and you can learn again. Or if you just want to rewind and watch the podcast again, that is also fine. So yeah guys, that was it for the concept that we learned today. I hope that was clear. Now I want you guys to do one thing, which is sort of an homework, is that look for examples of yield curve inversion in the history. Just search yield curve inversions in previous years on Google, and you'll find a lot of examples of yield curve inversion, and it will make the concept of yield curve inversion and yields and bonds much more clear to you. So yeah guys, that was it for this week's episode, and thank you for watching till the end, and I hope you guys liked this episode. I hope you guys learned something from this episode and you didn't feel like it was a waste of time to watch it till the end. But yes, if you have any sort of suggestions for me, or if you want me to change anything in this episode, in this podcast, in this episode also, or if you want something added, something new that you feel like should be added into the podcast, do let me know in the comments, or you can also DM me on Instagram, and I'll make sure that if it is something that I can do, I'll definitely make sure that it is added into the podcast, or changed from the podcast. But yes, that was it for this week. I'll see you in the next week again in another episode. Bye bye.